Good morning, ARMR Insiders. Welcome to the morning call. This is Stock Market Investing with the ARMR Report. As you all know, I'm Brett Rosenthal. I'm going to share with you the basic three-stage process of investing, what I call the ARMR Investing Way. We build our whiteboard to where we put all of our fundamental research. We use ARMR algorithms to help us execute on a big scale using the ARMR Risk Monitor, looking at the top 8 indexes, telling us when to add capital, when to take it out based on institutional flows of capital. And then, of course, drilling down into individual stock algorithms, looking for the right entry on each position we're buying. And then we wrap it all up with a tight stop loss discipline. So let's go over where we are in this bull market. It started last year in March, right, when the Fed started adding liquidity. But there's been many ups and downs, and we follow the risk monitor that helps us put capital to work during weakness in the midst of strength so that we don't have to chase later. And then we get to the managed success stage. So what happened was 5 weeks ago, the risk monitor went green from red. That was at a time where a lot of pundits, I'll put them in quotes because nobody really knows market direction. A lot of pundits thought the market was going to crash, all these different problems, blah, 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 Fed comments and all this stuff. And what we said here at the ARMR Report is, I don't predict the market. I don't know what's going to happen next. I have all the humility to know that I don't know. So our job is simply, investing is really simple if you boil it down to this very basic fact. We have to get on the right side of probabilities over and over again when reward is worth risk. That's when you commit capital. You still might lose money. The whole market could implode. It's probabilities. It's not 100% accurate. Right? But if you can follow a strategy that'll put you on the right side of probabilities 7 or 8 times out of 10, and then marry that with a stop loss discipline, you can see net worth increase over time. But equally, if not more importantly, you can protect that capital so you don't hit that inevitable 50% correction in the market in 5 weeks and see deterioration in capital and have to work real hard to build it back up. So that's the ARMR Investing Way. Can you buy things and hold them long term and go through wild volatility in your net worth? Absolutely. And if that suits your personality, I'm happy for you. I'm happy for you. But for the rest of us, the object is to protect capital at all times, because that capital is hard to earn, right? So we protect it at all times, and then we capture upside when we can. So 5 weeks ago, we said, hey, even though it looks dire, now's the time to put capital to work. That's the probabilities. So we did, right? 5 weeks later, net worth is up. Net worth is going to fluctuate. Some portfolios up more than others, and that's because of the whiteboard, right? We're only as good as our research and our whiteboard and what we focus on, right? So if we capture the right part of the whiteboard, then you can really see net worth accelerate. So a couple weeks ago, we talked about adding NASDAQ 100 and ARK Innovator type of stocks to the portfolio, because that's where we saw institutional flows coming, right? And so that's what we've seen the last couple of weeks. That's where the alpha is. Money's coming out of industrials, out of the small caps, out of financials, those types of things, into what happens to be my personal favorite part of my whiteboard, all the innovative type of technology names, right? And so we're in the thick of that now. So we've entered the phase that we call managed success, okay? And we're in the grind higher mode of the market. As trends get stronger and you begin to grind, they change that trend. What we're shifting to now is a grind higher mode. Gamma information's filling in underneath the market. We're starting to grind higher. We're going to see compressed volatility, right? As the market grinds higher. And our job now is to manage the success. And we do that by booking partial profits at targets and I'm going to show you in a minute stocks that we own that have hit targets now. So we'll be looking to book profits and how I do it, right? We raise our stops. So once an asset's up enough, you can't let a gain turn into a loss. So you got to raise that stop either to break even or more aggressively, depending on the type of swing trader you might be. Right? And then we look at our whiteboard and we keep looking for new ideas coming off the board that we might want to rotate into. So let's go to the charts now and see all three of those aspects. So we're ready for our trading session today. All right. It's funny, I have grayscale Bitcoin up here. This is interesting. I just read a story that Kathy Wood bought 1 million shares. Must have been shares. She just put a large amount, let's put it that way, a large amount of $77 million into Bitcoin-related securities. And then there's a large amount into BTC, GBTC. Interesting. This is not on my list. I just happen to be looking at it. I'm not going to be buying that. So first thing we want to do is just take a quick peek at the market. We've entered the grind higher mode. Okay, we constantly find support at the 50-day moving average, which is the black line here. Okay, so what we're looking for now is new highs to develop on the market after consolidation going back April, May, and June. So a 3-month consolidation, breakout to new highs. We're over-focused right now in our portfolio on the NASDAQ 100. QLD is what we're using in index-only portfolios, and as you can see, we're breaking out to all-time new highs. Okay, we have a focus, an over-focus on the ARK Innovator funds, buying them right off the lows, and stocks that are in this ETF. We're focused also on buying our favorite names and kind of cherry picking along with the Innovator funds themselves. So let's take a quick look at what hit our targets yesterday. CrowdStrike blew through a target, blew through it. All right. So there's two different ways to go about it. CrowdStrike blew through a target and PayPal went through a target. Okay. From our entry point to our initial target. So let's go over how this works. Our spreadsheet is broken down into 3 segments: lower risk, moderate risk, higher risk investments. The lower risk section, the targets are going to be quicker, okay? Along with lower risk is lower upside. So when they pop at all, we book a little profit, raise our stop. On the higher risk names, we're looking for a bigger upside before we book a profit, okay? So PayPal is under the lower risk section and CrowdStrike is the moderate risk section. They've both gone through targets. So there's 2 things to do with that information. Number 1, and this really depends on you and how aggressive you are. You can go out there and book a profit immediately when it hits the target. What I like to do personally is when the target is reached, I'll use the low of that day as where I'll book a profit. So what I want to do is I want to allow the asset to run if it wants to take off. I don't want to cut anything. But if it goes below the low of that day where it hit the target, okay, then I'll book some profit. And it kind of depends on the market environment we're in. If I thought the market was rolling over and breaking down, I'd book profits as soon as we hit targets. Right now, I think we're in the grind higher mode, and I think there's a run right on through July 4th weekend, which I've been talking about, for the last couple of weeks with you guys. So I'm going to let these stocks run, and I'm going to use the low of yesterday as my stop where I'll book some profit on those stocks. Okay. Also, this is real close today. We'll see if it goes through it. But, we're long shares of Illumina, and it just keeps, and we just picked it off perfect. We bought it right here earlier in the year for this run, sold it, booked a profit, bought it back on the double bottom right here, and it just keeps walking up. And along with that, I don't think you can really own one without the other. We own shares of Pacific Biosciences right in here, right? So if it pops up today, it's going to hit its initial target. So keep an eye on PACB for possible profit targets being reached. All right. So let's shift over to, to what I would have an interest in adding to the portfolio today. And some of the things we added yesterday. So first of all, let me just chat with you guys for a second. When we add things, lower risk, moderate risk, higher risk, the lowest risk type of investments, which are biggest cap, most liquid, easiest to trade, carry bigger position sizes, right? And then the higher risk carry a smaller position size. That's just a basic guide. The ARMR report's a guide for you. It's how I run money, but take it as it is and make it your own. And it's not a guarantee that I have a small, my smallest position in every higher risk name. I might bump up some positions. It depends. But that's just a guide for you. So let's go through a couple of recent acquisitions, and then we'll share with you some of the new names that are at the top of the whiteboard. So what we added yesterday after listening to that conference call is Plug, right? So we added a position on Plug Power. Obviously, whenever we're late in the cycle, right? We're in the grind higher mode now. So when we're in the grind higher mode, we're a risk monitor yellow. I'm adding new positions. The stop on every position that we're adding is the low of the day we bought it. Okay, the low of the day we bought it, or the low of the day before, depending on the chart pattern. Okay, that's it. So if this market hits a force that's larger than the trend, that reverses the trend, we're not going to be sitting and holding all these new positions. We'll bang out of them quickly and say, wait a minute, something's wrong. And don't forget, I'm sharing with you our grind higher opinion. I'm sharing with you 5 weeks ago, it's time to put money to work. I share with you the playbook, if you will. I like to say the market's following a script, and I share that script. I don't have a crystal ball. I don't know how long that script will be played out. When the players go off book, we have to recognize that, read and react. Okay, that's the point of sharing the script. It's not that I'm out there saying, hey, look at me, I know the market's going up. I don't. What I say to you is the probabilities are X. That's the script. We should be grinding higher now. If that changes, be aware that something's wrong. Because we're not going to know what's wrong right away. We'll find out later. Last year, February, market was grinding higher. And then every index got stopped out of our strategy in a 48-hour window, shifting us to risk monitor red. And we didn't really know the reason. I mean, we heard stories about possible, nobody talked about pandemic at the time. People were talking about, oh, there's, a virus, blah, blah, blah. But we've heard that repeatedly for years. We had all kinds of viruses coming out of China. So, okay, market was dealing with it. And then we had that event, right? Something changed about the script. We went to 100% cash. 5 weeks later, the market was down 40, 50%. Positions were down bigger than that. And we understood we were in the midst of a pandemic, okay? So we never know what the next event's going to be. So what we do is highlight what is the script to be aware when that changes, we have to react, okay? So anyway, Plug Power, all right? That was an interesting conference call, put on a position. I might increase that position size on weakness this morning. It's a really, really interesting conference call. It's early in the cycle, but it looks like they're going from a US-based business to a global business, and they're getting all kinds of business from big tech companies like Amazon. It seems like a story that's been a long time in the making, and it's starting to really mature. So we added that to the portfolio. Are you ready for this? I hope you're sitting down. I hope you're all ready for this. So I'm so excited. I'm going to tell you this. Ready? We've been out of cannabis stocks a couple weeks now. They just keep going down, so I'm not going to hold on to them, but I can't wait to buy them back. So I just keep looking for any type of green shoots that tell me maybe it's time to pack a bowl, all right? So here we go. We added shares. of grow generation yesterday to the portfolio. What we're looking for in cannabis names are these higher lows here, right? I'm looking for a higher low. I'm looking for an asset that makes a double bottom at the 200-day. Higher lows, showing that the buyers are getting more interested in picking off the stock, all right? If it ever breaks this downtrend, the thing could get legs. So we're starting here. I'm not buying shares of MSOS because I don't like that pattern, first of all, and I don't like a whole bunch of stocks that are in MSOS. They don't look good. So what we have to do is try to cherry pick and see if we can buy the leaders. And if the leaders work, then we can spread out and buy other names. So we added shares of GrowGen. Okay. So there's another example for you. We added shares of Keysight. That's just a beautiful chart pattern, and it's a stock I've wanted to own for a long time. It's been on the radar for a long time, and I initially missed this breakout right here, which really disappointed me. And so this consolidation just looks too good to miss. And we're on shares of Keysight. Okay. Halo, added shares of Halo. Okay. We added shares of apps back to the portfolio. So those are stocks that we added yesterday. Here are the names that are at the top of the whiteboard for possible inclusion today. I'm not 100% sure I'm going to do this, but I'm just sharing with you what my eye's on. And it's so funny. I was thinking about doing this before I read the Cathie Wood story. I just looked at the chart patterns and I thought maybe this is the entry point to put some capital to work in cryptocurrency investments. Those of you who know me know that I've avoided it, the space. I've been doing other things, going elsewhere, okay? But constant research, constant building of whiteboard. Here are two names that I'm looking at closely for possible consideration. Silvergate's one of my favorite ideas, fundamentally, in the space. And it looks very much, if you look at this chart and then you look at the apps chart, they're very similar. They have pennants up here that broke down, found support in the uptrend, making a higher low. That's an interesting and compelling chart pattern to me. So something like this, right? And something like this. Something like that. Does it make a higher low? Does it break this little downtrend here? And if it does, do we want to be on it? And my answer is I think I do. Because I'll tell you why. There's no way I'm paying up for these stocks when they skyrocket. There's no way. I'm not chasing these names. So we've got to buy them on weakness right near the stop. So our loss potential is small, but the upside could be enormous if we get a move in these assets. And I don't know if I'm going to do this, guys, but Coinbase is the other idea that interests me. So I'm wondering, is there a double bottom in place right here on Coinbase? Now, I don't usually buy stocks that are new issues this early in the cycle, right? I usually wait for them to be down here somewhere 6 to 9 months in. So I don't know if I'm going to do this. If I do, it's a high risk, high reward, only certain portfolios would I add that to. But I'm wondering if that's the double bottom I'm looking for. So it's something that's on the radar. Okay. Infinera. Really good looking chart pattern on Infinera. I've chased this stock on and off over the years. That's a compelling pattern right there. And so I may be looking at shares of Infinera today. Twitter. I keep toying with this idea. I don't like island reversals like that and major tops like that. And so what's happened here is Twitter's gone and closed the gap. And I'm probably not going to buy that pattern. I might day trade it, but I feel like what you do is you run up, you close the gap, and then you have to build another pattern that would be viable to me. So I'm probably not going to chase after that right now. Do I have any interest in the steel stocks again? If I do, it's going to be Cliffs, although those patterns really I don't really like those patterns. I'm just looking right now. Ford, we owned it, we bought it, we sold it, we booked a nice profit. Do we want to put Ford and GM back in the portfolio? I don't know. I keep leaning towards what's really working which are the innovator and growth stocks. But I'm just showing you some chart patterns that interest me. Boy, I want to own that stock. And so I asked myself, just how many cybersecurity names can I own at once? We have a lot in our portfolio. But I'd love to add Tenable. That story is just such a no-brainer to me. And then I have this soft spot for PSTG. Pure Storage. It's such an interesting story to me that I have my eye on that asset. So those are just some of the thoughts that are at the top of my head. Oh, let me wrap up with, if we're going to do, GrowGen, right? And it's possible that the other two positions I'll put on, we're already in GrowGen. We did that yesterday, all right? I'm going to have my eye on Telray and CGC. I want the biggest, most liquid Canadian companies to put in the portfolio. Telray right here on the 200-day looks like a no-brainer entry. So I'm going to look to day trade that. And if I get the trade right, I might hold it overnight. Canopy Growth. I like the story, but that pattern is not nearly as good as Telray. So I don't know what I'm going to do with that. And Kronos looks really compelling too. Man, Kronos is even more compelling. I don't know why that is. It certainly looks more compelling. Don't forget, I'm a big fan of OGI. So along with my GrowGen, if that starts to pay me, it's going to mean to me the window's opening for some cannabis, and I'm going to go Canadian cannabis because those charts look better. Those charts look better. So I might fill out the portfolio with cannabis. So those are my thoughts for this morning. I hope they've been helpful. Any questions you have before we get to the live trading desk? Any questions you've got? Let me know. Shout out. Let's take a look at a couple of chart patterns that ARMR insiders have been talking about this morning. All right, Winnebago looks like they had a big quarter according to Ares. We'll see how that stock trades. Juniper Networks. Could be another cybersecurity name. MDT, the chart looks great. I mean, it's just a question now, where do I find room for a name like Medtronics? The chart looks absolutely great. Couldn't agree more. Can I find room for it? DraftKings. All right, let's get rid of this channel because it's going to stop us from buying the stock. It looks like such an awful pattern. The question we want to ask ourselves is DraftKings building a higher low base here after that hit job from Hindenburg, which is a short selling rag? Just in case you all are not aware, Hindenburg is the same short selling company that put out a 12-page research report. And I say research, and I put that in quotes. They put a research report out on GrowGen right in here, saying that GrowGen was run by a bunch of crooks and that the companies should be investigated by the authorities. How did that work out for Hindenburg? How'd that work out? So now the same hit piece written by the same short selling rag wrote a report on DraftKings saying that it's connected to the mafia. Okay. Ideally, I think that means that we should be looking to add shares of DraftKings again. So I have the sneaky suspicion that the people who run Hindenburg get paid by hedge funds who want to buy large amounts of shares of a company. Write a hit piece behind the scenes that the hedge funds are buying up shares of DraftKings like crazy. So does it make a high or low double bottom at the 200-day moving average and then break that downtrend? That could be a stock for sure that we day trade today. And if that's the case, then you can't forget Penn. The two stocks go together. And it's making a double bottom right here on the support. So those are at the top of the list. All right. Yeah. They weren't right at all. They weren't right at all about they weren't right at all. It didn't make a single penny for anybody who sold GrowGen. Ask me how I know. Now, of course, we own GrowGen at $3.50. We booked our profit at 18 and change. That was a real nice gain, right? And the Hindenburg wasn't the reason why I sold it. Those issues with management were always issues. I never liked management. But that hit piece was ridiculous and completely not accurate at the end of the day, right? And the stock responded. So we just need to be aware that when you see a hit job come out from Hindenburg, it could set up a great buying opportunity. And I think that's why we have to put DraftKings and Penn at the top of our list to consider if we get the right algo entry point into those names. They also go right into, they fold right into our philosophy to focus on innovator type of investments. That whole space is going like this. My guess is Penn and DraftKings are going to follow. All right, guys. Enjoyed the morning chat with you. I'll see you all at 2:30 for the in-game update. I'll see all of you in the Slack room throughout the day to share ideas. And of course, the live trading desk will go live at around 9:15. So I'll see you all there too. Take care, everybody. Have a great day trading.